the show here today. So coming in right after this, we will be bringing in Chris to the conversation. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, and we are back with Chris. Hey, Chris, how's it going?
What's happening, Nick? Happy Monday, everybody.
Happy Monday. Good to be back on the charts with you. And S&P, Nas, they're back to the highs, and no shortage of stuff to talk about this week, Chris. We have NVIDIA earnings this week. We have meeting minutes. What are you looking out for? Is this just going to be another melt up moment where we just see, new highs lead to more new highs, or what are you thinking?
Yeah, we're gonna see. So my thoughts going into what we discussed last week. I was cautious about a couple of things, right? So coming into just looking at the charts technically, this is the SPY. I had mentioned on the weekly times again, and let me bring down my subgraphs here. Getting up to these all-time highs again has me a little bit cautious on the number of points or the number of additional dollars we can move to the upside. Here's why. The indicator that I have here, you know this one well, Nick. This is Knoxville divergence, classic divergence indicator with overbought conditions and divergence. So we have higher highs in price. We have momentum disagreeing, as well as overbought conditions with hidden bearish divergence. That combination right there, to me, means that the higher probability is we're actually going to see more of a directional move to the downside. Now, how big is that downside? I don't think it's big. I think that if we have another dip or pullback, it's going to be maybe to the 2 to 3% window like we've seen most of the year outside of April. We have NVIDIA, like you said, we have FOMC minutes on Wednesday. The SPY shows divergence. The Qs also showing divergence. Overbought conditions, all-time highs. Momentum disagrees. Overbought conditions with hidden bearish divergence there. The DIA, same thing. We connect the highs, higher highs in price, divergence, as well as divergence and overbought conditions. So let's talk NVIDIA. Right. This is where I think the market makes its big move. I'm probably going to position myself this week, Nick, for a Wednesday 30 right now, $2.31 trillion, $2.37 trillion. That is certainly enough to move the market all by itself, maybe 1 to 2%. So if I look to position for that Wednesday, Thursday, Friday, let's say, it's after hours on Wednesday as NVIDIA. Coming into Thursday, I would expect some similar gaps, right? We had big gaps earlier this year with NVIDIA. We had a big gap the last couple weeks because of Apple. We've had the melt up because the broader markets, everything's finally back above the 50 moving averages and the 200 moving averages. So we've had earnings that have been great, and NVIDIA can do no wrong. And I don't know how the market's going to react. It's an earnings play. It could be up or down. It could be good earnings with a bad move. It could be bad earnings with a good move. But I will say that if the market gets excited where NVIDIA opens up here on a Thursday, I could see that move getting faded right away, just based on the bigger picture and the bigger technicals. If NVIDIA earnings are somehow bad and the market isn't like that, I can see NVIDIA dropping a big way and also having that correction play out in the markets right away. So I really do think that NVIDIA is going to be the make or break on whether we go and sustain a higher move or if we have a pullback coming near term.
Well, on a week like this, Chris, you got to think also from the overall picture here. a lot of it is behind us. A lot of the data that we had been looking towards, with high hopes like inflation and jobs data, has been pretty much Goldilocks. It's been pretty much what the market has wanted to see. So I think when you weigh that in, it just adds to, okay, all of that is behind us. There's not something behind NVIDIA earnings in the short term, in the near term, that is like, oh, well, we can just keep looking towards that. Like, I think what's going to happen is NVIDIA's earnings are potentially make it or break it. Like, it is potentially going to either signal, okay, we've solidly cleared the previous high and perhaps we just see that run up continue. Or if it's anything but stellar, anything but perfection, I think you're spot on with, probably a pullback, probably, especially, technology as a whole, a broader based pullback. And you got to think too, NVIDIA, I was saying this earlier in the stream, for my listeners who are not stock specific people, or you're not trading indices, please don't tune this stuff out, because NVIDIA is such a key signal to beyond just the stock market. The semiconductor space nowadays acts almost as like one of the number one indicators of like global economic demand, because right now stock indices globally are more exposed to tech than they, I believe, have ever been. I could be wrong about that, but I believe like technology weighting in the S&P 500 and markets abroad are so heavily exposed to technology, and the whole technology trade is about AI and innovation, and all of that requires chips. So if there's a slowdown in the demand for chips, the entire kind of demand for chips slowing signals that, maybe the trade is potentially slowing. And if the demand is rock solid and red hot, onwards we may go. So I'm very interested to see how the earnings comes out. And if you're wondering, that also impacts other, areas like currencies and gold too, because I think that if you have just a rock star stellar NVIDIA earnings, let's just paint that picture. How does that impact gold and how does it impact the dollar? Well, gold, that kind of instills confidence in the world's kind of economy. So that could actually be a hurtful thing to gold. Just a kind of a nuance there. And then finally for the dollar, could be strong for the dollar if you get a really strong NVIDIA earnings. That's tax revenue that could go back to the US government. You know what I mean? So something to think about.
Right. Yeah, and I think looking at the dollar as well, I mean, the dollar is, so what are your thoughts on this, Nick? So the dollar to me has been in this pretty obvious broadening pattern, but I could see the dollar doing this where we have and higher lows, and we go from a broadening pattern, which would be an expansive move, to then a narrowing move like a wedge. Too far ahead, but the dollar's been the least like trader friendly basket going into 2024 because it's been all over the place. We've had, up moving the dollar, down moving the dollar, up moving the dollar, down moving the dollar. If we break 103.90, I hate to say it, but breaking below 103.90 and certainly breaking below 102.70, I'm bearish on the dollar back to those 101 and 100 levels, maybe even more. But I still don't know how the dollar would get weaker in front of other central banks that possibly start cutting as early as June and July, and the Fed's looking at September. So that would be interesting to see if there's a flip where the dollar gets weaker in front of these other banks that might cut earlier than the Fed. And if you look at the watch tool for December, I was looking at this earlier in my session. We're not really convincing, based on the probabilities right now for the CME Fed watch tool, we're not really convincing that the Fed should see another rate cut in December. We thought it, right? I mean, a couple weeks ago, it's like, oh, they're going to be 2 cuts this year. September is the one that is pretty obvious. Like, that's 50% probability right now that the market's kind of running with. If there's a cut this year, it's coming September. December, it's split. I mean, 36 to 34 for a pause right after a September cut, or another cut in December. So not really sure what we have. Tap cross of 56, that's the chart one. So I look at the dollar index, and I think NVIDIA would be the excuse for the market to make the bigger movements this week. If it's to the downside, I could see the dollar getting bid from there, and this support continues to hold. Structurally, some really strong support. That'd be the obvious play for me. It's more of a wait and see. I'm not going to position ahead of NVIDIA. I'm not going to position ahead of the anything. I'm going to wait for the dollar to confirm, take some clean trades, maybe take some swing scalps. But I'm just trying to play it really clean. I was in Seattle this weekend for a Tasty Trade conference, and I'm going to start incorporating a lot more futures and micro futures into my portfolio with some currency exposure. I mean, things like actually another way to kind of add the way I want to play the Japanese yen. I don't think the carry trade is going to unravel yet, but when it does, and if it does, and how it does, I could see the dollar weakness going in to favor some Japanese yen strength and higher volatility in the forex market. One thing we have clearly seen right now is way less volatility in the stock market, and also way less volatility day to day in the currency market. Outside of 2 interventions from the Japanese yen in the same week, our daily trading ranges are low.
Sure,
they're so low day to day. So we have low volatility in the currency market, and that is followed by higher volatility. It's going to change.
Yep, Chris, I don't know if it's you or me. Can Chandler or James let me know? I think there's a little bit of delay. I don't know if your computer is like working hard today, or if it's your internet connection or something. And let me know again, Chandler or James, if it's just me. But I think there's like a little delay in our conversation / when you're sharing the screen. So I just wanted to check in on that. I'm just going to give you a quick update here, guys. S&P 500 here, now breaking. We're near all-time highs as we speak. Here's the 4-hour chart. Look at that, another green candle forming. And, Chris, I actually sold, I closed out of my covered call. I took a punch to the gut, and I said, you know what? I don't want to be taken out of my trade. I know I wrote the covered call against my VOO position, but I said, you know what? Everything here is pointing to me to stay long the market. And yes, do I know that I sound just like everybody else on CNBC who says, oh yeah, market's going higher from here? Yes, I know that. But sometimes sentiment is right. The Dow just hit 40,000. The market looks just real strong. The market looks like it wants to go higher because, again, all of the things that had been short-term questions and concerns are dried up. I mean, yields have backed, they come back down a little bit. That's a positive. People were afraid that the economy was just going to be an instant melt up or continuous melt up. And so that fear has kind of come off the table. Geopolitics in the Middle East. Yes, you had this news overnight about the helicopter down, the president of Iran, but you have to kind of listen in closely to that and say, is that really going to change the story of what's been freaking out the markets? I don't know that it is. Israel didn't claim any participation in that. So, who knows what happened there? If there's conspiracy, I'm sure there's plenty of speculation. But the point is, in the immediate term, I don't see that being a massive, escalation event. So that's not really on the table. Earnings were rock solid. I mean, yes, we have NVIDIA. That's the last kind of big name to earnings season, I would say. But again, overall, the picture looks really strong. And I think the path of least resistance is to the upside on the market. I do think that we are probably, as you mentioned, Chris, probably due for a pullback. I mean, we've had just several straight weeks now of just straight up moves. So you probably see some pullbacks in here. But to me, I want to remain long for now.
Yeah, I do not disagree. In fact, I was just looking at the NASDAQ, and look, the Dow hit 40,000 for the first time. It officially took 7 years to double. So it annualized about 10.28% for the last 7 years. The NASDAQ, maybe 20,000's in the cards. That's another, it's not that much higher. It's only another 6 to 7% higher, which in a Goldilocks type year, we could certainly see the overall broad market, the indexes, the ETFs all push, maybe high teens, maybe 20, 22 to, 20 to 25%. It makes me very cautious moving into 2025, but man, I would feel like a moron if I'm just trying to sit here and justify shorting a market that is not interested in going down at all. So, you took off your covered call and you're just kind of letting your positions run. I don't think that's a bad thing to do. You can also always roll your call out, collect some more credit.
Sure. Yeah, and I thought about doing that. I ended up choosing just
because
to
I'm sure with the indexes you can roll for, give yourself more time, possibly out in time, and then possibly up in strike price. So you can maybe roll it for credit.
Yeah. Chris, I'm going to ask you, can you try restarting your computer? I'm not sure what it is, but there's like a pretty big delay, and other people are saying they're seeing it too. So I don't know if maybe something is just working on your computer, but if you want to restart your computer or back out and just try and come back in, that might fix the issue. I'm not sure what's up with it.
Okay. Let me back. I'll back out, come right back in.
Okay. Sorry about that, guys. Yeah, Chris is going to try and just fix it. I'm not sure. For a little bit there, I was like, am I going crazy or is it just me? But I think what happens on my end sometimes, or with my old PC, and I think Chris has probably an incredible PC, but sometimes, like if my computer is working really hard, the streaming software here starts to get a little bit delayed. And so I don't think it's me. So please let me know if I come in choppy in any way, but I think Chris restarting it should hopefully help. Anyways, yeah, so I just wanted to add context to what I was saying to Chris there. So I am long VOO. I closed my call. I took a loss on the call that I sold, but I think in the greater good, it's going to turn out fine. I'm still long the S&P 500. I wanted to stay in the position. And so, we just went ahead and I went ahead and closed out the covered call. And as Chris was mentioning just before, he pointed out that I could sell another covered call. So I will say this: if we continue for another week, if NVIDIA earnings, actually this might be the trigger for me. And we can try bringing Chris back in. Hopefully he's better now. We'll say hey to him. Hey, Chris.
Hey.
Hopefully you're all good now. I was going to say, to your point about rolling or selling another covered call, the reason I closed it too, like just closed it outright and just realized the loss on it, was like, if we get NVIDIA earnings that are just incredible and the market pops on that and the hype runs, I'll probably sell a covered call in that moment.
For sure.
Like, that's my chance. And if it drops, then whatever.
Yeah, no, you're right. And also, and I've been in a situation before too, where, you can always typically roll out index covered calls for credits, but you'll get in a situation where the market is outpacing those covered calls. And it's like, you roll it. And all of a sudden now you're stuck, 2, 3, 4 months out.
Yeah.
And you're capped at your gains and you can't roll it any further. And the market's up, an extra $5, $10, $15. And you're like, well, I collected a whopping, $3 of covered call rolls and I'm missing out on $10 of upside. So I get it.
Yeah.
I get it. So
yeah,
I'm hoping that the moves go, your way. And, just speaking of this week, right? So I think I'm going to take a look here at this. This is last week. So keep it really simple. Like last week's breakout was on Tuesday. So we had a Tuesday breakout. Wednesday was a gap. Wednesday to Thursday was a decent drift. Wednesday's move was really the directional day of the week. And then Thursday, Friday, pretty quiet. Here we are sitting at the highs of the week once again. Here's the probabilities for you, Nick. If we break the highs from last week again, the probability is about 70% of the time we will stay higher for the week and not come lower. So what I might end up doing is just doing some credit spreads down here and just keep a directional bias that's slightly bullish. I might actually take this and do a SPY put instead, which would be right here if I did this on the SPY. So the SPY last week was all the way down to 519. If I did just like a naked put on the SPY, I wouldn't mind doing that. I have a bunch of trades that they're slightly bullish bias, but they're out of the way. I'm doing like ratio spreads. I'm doing broken wing butterflies. I'm doing all sorts of things where I'm collecting some credit, possibly willing to take some assignment. But if I own the shares of the SPY or the DIA or the QQQ, I'm owning it exactly at prices that I want to own it. So, I obviously would like to own the SPY at 500 or lower. I'd like to own the Dow at, 400 or lower. I'd like to own the NASDAQ at 3 or the QQQ if it was 400 or lower, the Dow at 380 or lower. And I have positions worked where if I'm willing to take assignment, that's where it's going to be. Otherwise, I'll just collect in the next 30 to 45 days. I'll just grab an extra $3 or $4 of credit. So I think
that's a very fair approach, Chris, because you got to think. And by the way, the lag seems to be fixed. So thanks for doing that. The election this year, I think, is another thing. I think that the probability, and not just me, the VIX futures market also says the same thing. The probability that you just see a smooth, no problems run to the upside, I think is unlikely. And I'm coming from a bull, right? I've admitted defeat. My covered call was my hedge, was my, tent of bearishness in there. I closed out. I am bullish, but also I think that with an election year, to think that we're just going to enter a slow chug grind with no problems whatsoever is probably unreasonable. I think that there will probably be pullbacks, as you said. Maybe the more we go back to that like 2% drops, and maybe we just play that for a while. And I like the idea of staying long bias, and I also like your idea too of I love that stuff, is of like selling out of the money puts and just saying, if I get assigned, great, and if I don't, then premium while I wait, and that's fine. I think that getting, also one big mistake you could probably make is getting too caught up in this is the perfect perfect storm, because we make this point often, Chris. Now that all the clouds have rolled away, look where we are. We're already past all-time highs. The problem that I always point out when I want to buy stocks, or I want to buy indices or gold or anything, I like to see a good point of view from both the bulls and the bears. I talk about that frequently because right now the bears have like very little tangible case. When I listen to CNBC or Fox or anything, Bloomberg, whatever, the bears are like hiding. They don't come on the camera anymore because there's nothing to say. They're so, all of the concerns, inflation, but then they missed the earnings story, which was Rockstar. So it's like the story for the bulls is so clear, but that makes me nervous because when that starts to happen, those are where you get the sudden, reintroduction of a bear case, and that's where the market drops. So I don't know. It's tricky. What do you got for us?
I'm going to check one thing here. I think so I'm just going back to the fear and greed index. We talked about this a couple of weeks ago and just did a spot check on it. It was back to neutral. So here we are at all-time highs in the indexes, and we're officially hitting greed. That's not a bad thing. I think that we can stay here, but if we start to see extreme greed in this case, Nick, then I'll be way more cautious and probably plan on maybe a 1 to 3% correction. So I think right now things are looking fine. NVIDIA this week, like I said, I'm treating NVIDIA, I'm trying to be neutral. Like NVIDIA, I did the numbers on this. The last 10 earnings reports, only 3 of them have hit the expected move or beyond. So it's not a high probability trade as far as I'm going to go long NVIDIA and expect to see the 90 to 100 and some dollar move. It's going to move regardless. Like there's going to be a gap from Wednesday to Thursday, most likely.
Expectation's 9%, right, Chris? Is it something like that? Expectation. I listened to somebody talking about it. They said like the expected move in the options market is like 9%.
That's on the low end. I mean, the expected move over the last 80 earnings is like 14 and change. I actually was a little bit more conservative, and I'm looking at like a 12.5 to 13% move. So the IV, I mean, the implied volatility on NVIDIA, Tasty's showing it their expected move around $90 for the week. Or if you go out to like this Friday's expiration, it's like a $90 move. I'm going a little bit higher than that, like the $120, $125 move. So I already talked to Frank about this offline. I think there's an easy way to trade it. And it's going to be cost effective. I'm just going to do a couple of credit spreads. It'll be in the money bull put spread, in the money bear call spread. I'll try to collect about 70 to 80% of the premium on that. And if I'm right, one side pays, one side doesn't, and I take the profit run. And then I'll deal with what the effects are. I'll deal with what it does to the SPY. I'll deal with what it does to the NASDAQ, good or bad. So I'm kind of treating this as that's a good volatility play for this week. I do think the markets, have a chance to rip higher if I'm following just the simple. I mean, look at this right here. We have ripped for 4 straight weeks to the upside to take out all-time highs, which took, to the downside. We had only 3 weeks of selling, 4 weeks of upside. What can we stretch to? We can easily stretch to 5, 6, 7 weeks in a row. We had 16 out of 20, 17 out of 20 weeks going from October to March. So, I mean, it would seem a little long in the tooth if we had another like 15 out of 20 weeks to the upside, but it can definitely happen. It can happen with, the bears being silent, the bulls just running, low volatility, VIX is at lows. There's nothing to disrupt this right now. But I do say this, how high are these markets going to go ahead of the election? Because if the indexes are up freaking 20% before we come into a November election or whatever drama ensues from, a couple months into the election, I don't think we're going to I mean, I don't know, dude. I could be totally wrong. And maybe it's like, oh, the markets are up 30% this year. It's like, maybe they are. But man, I would be a freaking bull going into or a bear going into 2025. If we're up 25, 30% of these indexes, I would be bearish going into 2025. I'm sorry, but that's going to be my forecast.
Well, and here's not to get too political, and I don't have really a stake in this game, to be completely honest, but I've heard this theory a couple times, like that there's a presidential twist and then or change of office, and then perhaps there's like some volatility that ensues after, so that they could like drop it on the next guy. And I don't know. I don't know that they plan these things like that or anything. I'm not, really saying that that's where I'm at, but it is possible. You never know. I mean, pumping into an election looks great for the incumbent. It doesn't matter if you're favoring Republican or Democrat, anybody, myself included. If I was the president, I would say pump these things into the election so that it looks good. Anybody who's the president wants to stay president. So a stock market and 401ks being up is a massive benefit. Doesn't matter who sits in the chair. So yeah, I mean, really interesting stuff there. Chris, I've got to ask you one more thing before I leave the show for you. Silver and gold popped big. We hit all-time highs overnight on gold. Obviously, there was some geopolitics involved with the Iranian president passing away, his helicopter going down. Lots of course, as always, speculation and questions as to what happened there. But regardless, take the geopolitics out of it, I still like gold and silver a lot. I think that there's upside here. For me, it's become one of my better trades this year. I've added 3 different times to this position. I'm curious your thoughts, because I know you're also, are you still, very profitable in your silver setup?
Yes, I am. Very nice. Silver's one of my better runners, and sitting at highs again. I actually, and I was even willing to take some additional assignment on SLV last week. I had a 27 by 26, but the darn thing went up ahead and finished above my 27. So I didn't get assignment. I just took my full 59 cents of credit. I'm going to keep doing this. I'm going to keep doing credit spreads. I'm going to keep looking at trading some. I have a core position on GLD. I have a core position in SLV. I'm just trying to find ways to add to those. So I can hedge a little bit to make sure I'm protected to lower the cost basis. But truly for me, I'm bullish on both of them. And I mean, right now, since the technicals look better to me still on silver, I'm bullish to a bit stubborn. I would say, like, I'm going to be long silver until this first level, until SLV hits 32.77, and that would put us up towards a measured move. If I go to XAG, that puts me up to a measured move around 35.67. So to me, there's another $4 to $5 of upside on silver before I'm looking at taking some profit and then redeploying a little bit more efficiently. And all that would be is I would be up probably 4 or 5% for my entire portfolio on just this silver trade, thanks to establishing a core position, thanks to adding options to that to layer in some additional gains. And to me, that's great. And it doesn't have to be about, oh my gosh, like I doubled my portfolio on silver. Well, I didn't, because it's just one trade, but it's a good boost and it's a good pad to my bottom line. And I think gold and silver are great this year. And the one thing that's also, this is crazy, dude. We're sitting at all-time highs. But the comparison of year-to-date sectors, this is wild to me. We have the financial sector, and we have the utility sector, and we have the energy sector that are just as good as the Mag 7, just as good as technology, just as good as communication services with your Netflix and your Metas. It's pretty wild. And usually, and this is where the bears did have a case before we just hit all-time highs right back from the April lows. The bears did have a case to say, like, well, anytime I've seen the energy market, utilities market leading the way, that's not a good sign for stocks. Well, somehow it is this year. And I don't know what to make of that outside of, maybe this is the reversion to the mean. And this is, I mean, utilities has been battered down forever. And it's usually a terrible sector to be in outside of it's a dividend play. But I have something like the energy and utility sector right now. I don't know if it's because of maybe this gravitation towards nuclear energy. I don't know if it's gravitation towards AI and having more efficiencies on the grid. I don't know if it's because energy is getting more expensive.
I've heard that with the utilities a lot, Chris. I've heard that the, things like Palantir, the companies that can help to, really improve the grid's efficiency would be a profitable thing. But, it's not only XLU, you've also, as you mentioned, you've got energy up and financials. So, there's a little bit of something there. Consumer discretionary being flat is also a little, concerning to me, I guess. I guess one of the last areas that the bears right now are holding on to is the consumer. Like, you could point towards, like, not everything is perfect and
Sure.
rainbows for the consumer. So
Yep.
there's that, and real estate is still a question mark. And, I don't know. There's always a bear case, to be fair, but yeah, I think it is worth mentioning XLU, XLF. And, I think that adds to the story for me with gold and silver. You look at the stock markets, they've had incredible runs. It doesn't mean they can't continue, but investors may be looking for something that gets them out of the way of the dollar, or gets them out of fully exposed to the stock market at high evaluations. So I think that there's something here for gold. I think also, on a relative basis, gold, yes, it's at all-time highs, but I still think it has much, much more room to the upside. We've gone down that path a couple of times, so I won't repeat myself. But yeah, I mean, story for gold looks really good in my view. If you see the economy start to slip a little bit more, it's going to even look better. So we'll have to see. But yeah. What do you think on that, Chris? I'm gonna listen to your last take, and then I'll step out and give you the floor for a bit.
Sure, I could see this, right? We have this big rip on gold. I could see if we're gonna have some look. I believe that gold is going higher, as I do silver. It's not going to be without volatility. So in that sense, I could see us forming a little bit of a pullback or sideways range here. But if we come back and revisit these dips, that's a great spot to be buying again. I mean, it's hard, again, as always, it's kind of hard justifying I'm buying at highs, buying at highs, buying at highs. It's great when it goes higher, higher, higher. But I see some technicals. I tend to respond to these indicators. I've traded them for a long, long time, and they work on higher time frames. So when I see daily charts overbought and oversold, when I see weekly charts overbought, oversold with divergence, I'm a little cautious. So I could see gold just having a little bit of a break where we have some highs, we poke these highs, and then we pull back a little bit. But it gives the bulls a chance to reload. And we just kind of survive this area, and then the next leg is, in fact, higher. And same thing on silver. If we break all-time highs, and silver is still catching up, in my opinion, which is why I'm not dumping my silver positions yet. I think gold, after having this run right here, that's gold. That's been awesome, right? Silver is just now catching that and outperforming. So I think silver has the upper leg at this time, but both look good to me. Maybe some pauses and pullbacks, maybe some opportunities to add on dips, but I'm bullish on both. If I'm taking a direction, those are two great trades right now for me.
Yep. Love it. Well, Chris, I'm going to give you the floor for a little bit before I step out, guys. If you're listening here with us live and you would like to find out more information from Chris, he has his own YouTube channel and Twitter. If you're watching on Twitter, it's at Real Chris Pulver. If you're watching here on YouTube, we'll drop the link to his channel so that you can make sure to go subscribe. Please do that. It helps us to support the channel just by supporting our guests and co-hosts and everybody who comes on and contributes to the show. So make sure, again, follow Chris. Thank you guys very much for hanging out with me. And Chris has got the show for a little bit here. Stick around with him and enjoy. Chris, thanks, man.
Thanks, Nick.
See ya.
All right, everybody. I will take some requests. I saw oil pop in there. We didn't get a chance to talk about oil. Oil, to me, is still kind of proving that the bulls are around. I would obviously much rather pick my battles where I can buy oil at 65 to 67, or I could sell oil up here at 90 to 95. In the middle, I'd say the possibly the oil futures trade or the spec play would be your long with a stop loss right here, and that would be effectively, if I'm on U.S. oil, you could take a crack at it right now at 79 and change, put a stop loss below 76.70. And that's tight, obviously. But the upside would be if we do revisit these highs, you can see the asymmetry. So you have more reward than risk. Okay. If we also revisit these previous highs, then you have far more reward than risk. And that's if we're right. I could also see oil being very choppy. So this is not my favorite place to be long oil. Like I said, I'd rather wait and see. Maybe this is better. Maybe this is better. I would short it. I would get long, right? I mean, if I'm doing well in gold and silver, I don't really care about oil right now. I want a better price. I want better technicals. I'm not going to worry about it at this time. Dollar index, as Nick and I talked about, dollar index is still, I've just got to be a little bit more convinced that we have a better directional play on all the dollar crosses. If I take a look really quickly at the dollar, Aussie dollar has broken recent highs, but paused for the last 3 days. If you look at euro dollar, euro dollar has pushed up and kind of threatened this initial trend line that I spoke about the last couple of weeks. I was looking for a trend line like this, but notice how it just breaks and pauses. You know, I mean, I could see if we have a red candle that closes back down here, I could see that as a fake out trade. That's a bull trap, and the dollar actually gains and the euro returns. Now, this is what I mentioned earlier with the monetary policy divergence. If the ECB cuts rates as early as June and the Fed's not cutting till September, I mean, fundamentally, it doesn't really make a lot of sense that the euro would continue to gain strength over the dollar, right? It wouldn't make sense. So not that trading sometimes makes sense, but I could see this is why I'm just waiting before I deploy like a full-on dollar basket trade. If we see the downside here, I think I'll take a chance at selling the euro dollar, stop loss above, go after some fresh lows, possibly coming back into this level around 104 to 105. But I want to see some confirmation first. Pound dollar, I actually did take a position in my trading room that I'm really not loving right now. We took a small trade at 26.50 or 26.60 to sell the pound dollar. Stop losses above this yellow range right around 28.10. So if I take a small loss on it, so be it. If we're right on the dollar index and it does get some love this week and catches bid, then the pound dollar retreats. You know, maybe I get my trade up 50 pips or so. I might just move it to break even, not worry about it. New Zealand dollar, same thing, right? We had this decent little leg. This was a trade up last week on the 15th, last Wednesday. You know, big push against the dollar, and then we've gone nowhere for 3 days. Go to dollar CAD. You know, I mean, this to me, I'm hoping I'm long dollar CAD right now. I'm hoping that we don't come below 34.75. If we stay above 34.75, I'm waiting to see possibly this trade. We have some correction here. We have some chop. We have some coiling. I'd like to see if after these last, 3, 4, 5 days of selling pressure that we just hold this level. Past resistance becomes support. There's some decent structure in here before we take out that low. So if the dollar CAD can hold and we get a bid to the upside, awesome. Let's see if the dollar CAD can revisit, 3,900, 1.3950. So I'm long dollar CAD for that reason. This one technically looks a little bit better than others. And then dollar Swiss, it don't matter. I'm buying this one. I'm going to buy dips. I've got my 38, my 50, my 618 pullback levels. I'm long against the Swiss and I'm holding on to it. Somebody asked me on my Discord channel, Chris, why are you trading the Swiss and why are you so short against the Swiss? To me, it's the one carry trade I can participate in without all the fundamental drama. The Japanese yen, the Bank of Japan, what are they going to do? They're sitting at 30-year lows. The BOJ is going to intervene, which they've done. They did it in 2022. They did it this year twice in 1 week. I want nothing to do with the Japanese yen outside of the time that the markets are going to deleverage and the market's going to unravel this carry trade. Then I'll participate in the yen. And, how do I time that? I don't. I just start to acknowledge that it's happening. I start to be aware of the levels and I start to participate in it. But I am not trying to call or anticipate Bank of Japan monetary policy because they've come off of negative interest rates. They're sitting at 0 to 0.1%. I don't know if they might not have to raise rates ever again to see the Japanese yen gain thousands of pips in strength, or maybe they don't have to do anything else and they just get another 1,000 pips weaker. So I'm just exhausted by trying to be perfect on the yen. So don't. I'll just wait. But the Swiss to me technically was sitting at 20, 30-year lows or highs, and it was super resilient for a couple of years. And then they cut rates. The Swiss National Bank this year was one of the first banks to cut rates, and they were coming off of negative 0.75% and flipped it all the way up to 1.75, and they just faded it back to 1.5. I could see them cutting again to 1.25, maybe cutting to 1% and offering a bit of this carry trade differential. So for me, the carry trade is better on the Swiss. It's better technicals. I'm getting paid on swap. I'm getting paid also on pips right now. And so that to me was just a much better trade. So somebody asked that question. That's how I answered it. And I like the Swiss. And so I'm stubbornly bullish against the Swiss right now. I'm not trading the Swiss yen. I don't want to have the yen exposure, but everything against the Swiss elsewhere, I'm long. So Aussie, Euro, Pound, New Zealand dollar, long against the Swiss. CAD, mentioned that too. Okay. Dollar yen, let's see, good there. Yep. So everyone wants yen crosses. Let's take a look at the yen pairs. So yen, we're trading up to 104.21. What did we say? You got to watch these intervention levels, right? This is the first level intervention on the Aussie yen at 105 and change, all the way down here towards 99, or just shy of the 100 mark. Anybody that was paying attention to this in the near term, the best trade would have been buying that failure to take out the intervention lows and then be long and just trail it. I was long on the yen. And we took profit around that halfway point after the second intervention. Took a nice chunk of profit. I'm happy with that overall. Obviously, I forfeited some and I missed out on some. Okay. When does this unraveling happen? When the Aussie yen's on the right side of this trend line. If that doesn't happen, there's no reason for me to be short on this pair. There's no reason, right? Do I want to justify it now? No, because I think this high and this low for right now create some indecision where we have to wait. But if I'm wrong and it just keeps going risk on trading, one thing you have to know is the Nikkei 225, after making this comeback for the first time in 34 years, right? This is kind of, and this is, I should have brought this up when Nick and I were talking. The Nikkei was outperforming the US markets in a big, big, big way. Okay. Look at this interesting little switch. Now we have the US markets at all-time highs, and the Nikkei, after a pullback, is about halfway there. So could I see the Nikkei coming back up to hitting all-time highs again? Yes. Could I see it exceeding all-time highs again with a weaker Japanese yen? Yes. Right. I could see that the mission right now for the Japanese yen and the Japanese economy is, let's see if the broader market will continue to rally for them. If it does, it's going to rally on a weaker yen. There's no denying that a correlation of a weaker yen and a stronger index has happened for the last couple of years, especially, right? Huge rally in the Nikkei over the last couple of years and huge weakness in the Japanese yen the last couple of years. Okay. So this one, I mean, in fact, I should just set a chart alarm to see if we break the highs, we're probably going to see a weaker yen, which means it's probably going to test or probably going to take out those recent intervention highs. Don't be surprised if it does. This is why I'm saying don't waste your breath, your time, your energy trying to call a top on the Japanese yen, right? And if you're trading Japanese yen futures or trading FXI or FXY, don't try to call the bottom. It might drift lower, and it might drift, a little bit lower. It might drift a lot lower. I don't know, but I'm not interested in trying to be perfect on the yen. It would be if I want to call a top or bottom, I'm trading so ridiculously small that I can sit there and watch it. I could watch the Japanese yen get 1,000 points weaker and be okay. Just throwing it out there, right? So that's the type of mindset I would have. If I'm trying to participate and look for this big Japanese yen strength move, I better be willing to take another 500 to 1,000 pip drawdown. And if you're not comfortable doing that, then don't freaking call the top. Fair? Okay. So what about the Swiss yen? What about it? Don't trade it. I'm not trading it. So the Swiss yen, to me, ultimately could set up for a big pattern. I have the structure at the bottoms. This is what I want to see. If we break this level here, I'm short the Swiss yen. That's it. Until then, I really don't care. This one is not close to the highs, right? High, low, we're in the middle. I can see a little coiling here, maybe a wedge. But if we break and go higher, why fight it, right? Breaks and goes higher, stays in the channel. A bear would be convinced there. Right now, it's just trying to find good opportunities to buy low enough and eliminate risk. Don't do anything silly. Okay, trade yen small. If you're trading yen, trade yen small. That is it. Okay. All right. I think that covers it for the Swiss stuff. Gold and silver, we beat up gold and silver quite a bit. So LFC is asking, what about gold? I mean, I like gold a lot, right? But we're hitting. I've been clearly watching silver a lot because I keep typing in silver. Gold, retested all-time highs overnight over the weekend. And I could see, if we stretch a little bit higher, this was my full measure move from when we first had this upward move. So, 2470 is my measure move. That doesn't mean I turn bearish on this. It just means I'm trying to buy dips. So at this stage, I could see a little bit of indecision and a little bit of a, maybe a broadening pattern, or maybe some type of chance to buy the dips around 2275 if they're revisited. Otherwise, I've got to look for a flag pattern. If this goes up, 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 and then we have a little bit of a pullback, look to buy a flag, something like that. If this trend is going to continue to be so aggressive, that was arguably a little bit of a pullback. You can look for the same type of behavior. If it's really a true, strong, ridiculous, exponential rally, gold's going to be in a bubble ultimately. If we're forming a bubble, there's still a lot more to go, right? If we're forming a bubble in the stock market, there's still a long ways to go. You will be surprised how these markets can blow off these tops and have these capitulation moves that run, from a percentage standpoint, let's say 3, 5, 10% higher than you think they're going to go. And it's nice to be a participant in that upside as opposed to trying to call the top. Right. All right. So some of you might be tuning in just a little bit later. I did the pound dollar, I did the dollar basket, the Dow Jones, major indexes. I'm a little cautious going into this week's trading simply because I have some alignments that I watch and I respect a lot in my trading. So let me go to the QQQ. So, and this is across the board. These are all the major ETFs outside of the Russell. All right. So you've got the QQQ for the NASDAQ. You've got the DIA for the Dow Jones. You have the SPY for the S&P. I see higher highs in price, but I see momentum disagreeing as well as overbought conditions with hidden bearish divergence. That doesn't mean I'm bearish, okay? That means that I could see the market at least giving us a 1, 2, 3% correction dip before we're going to justify going higher, or we blow up higher, maybe because of NVIDIA earnings this week, and then we quickly fade back down to kind of make good on the technical assumption here before we resume higher. So for me to establish more of a long position, I'd like to see a pullback of some nature, whether it's a gap higher than a pullback or a pullback, and then we can get long again. That's all I'm saying on the technicals is I mean, we have stretched into overbought territory on weekly timeframes, which when it happens, I mean, just to take a look here, this is, I know the chart might look a little bit messy, but every time that we have stretched into overbought conditions, okay, take a look. Did we have a correction here? Overbought conditions on the weekly, do we have a correction? Yes. Overbought conditions here, do we have a correction? Yes. Overbought conditions here, do we have a correction? Yes. Okay. Did it get to oversold? No. Did it get to oversold? No. Oversold? No. Rarely has this on the weekly time frame hit oversold conditions, but here we are, right? We had a correction here. So right after we saw this divergence, we had a correction, and that was 2022. Here's our correction that I think we could be facing, in the near term. So that's all. I mean, look, the market, as I'm calling out these tops, the market's still making higher highs if you give it time. But I think that we could possibly stretch. I mean, look, the NASDAQ can hit 20,000 this year. I mean, would anyone, I would be impressed, not surprised necessarily, but impressed if the SPX can hit 6,000. That seems like it does seem like a long ways away. I don't think we can get there, but man, can we hit, 55? 6,000 would be, man, that'd be quite the stretch. We'd be another 12.5%. But I'll put this in perspective. Okay. The S&P right now, year to date, is up about 11%. If we go another 12.5% higher, that's not some crazy move where it's like, oh my gosh, unbelievable. The S&P went up 25% this year. It's happened. It has happened, right? Over the last 20 years, we have seen multiple 20 plus years in the S&P. This is one of those type of years where it could be. I'm not going to rule it out. That's all I'm saying. It would be more costly to fight this market and claim and proclaim and just shout from the mountaintops it's going to be a bear market and just be wrong every single week. So I'll just keep trading. I'll just keep participating. I'll trade what I see. Put a bunch of strategies in there to diversify. Try to stay as evenly distributed and not necessarily as high correlated as I need to be, or I don't want to be highly correlated. I want to be diversified, right? So that way something can make me money. But it is nice, and I'll say this, it is nice to have a little bit of a lean. If I lean into the bulls a little bit, it's helped my portfolio a lot this year, right? I mean, coming out of our Q4 last year, I was super bullish in Q4. It was awesome, right? I was bullish going into Q1 this year. It was awesome. I expected a correction in March and April. We got it in April, resuming the uptrend. It's been a weird May to see us March like we did. It wasn't really all the inflation drama, the Fed drama. It was earnings, and right now we're staring at the broader market up above their 50-period moving average, up above their 200-period moving average. The broader market is bullish. And that's it. So the technicals look pretty good. The earnings consensus look pretty good. The forward optimism is there. The word recession has been pretty much reduced by, 50, 60, 70% of earnings transcripts. Nobody's talking about a recession, right? Nobody's talking about a hard landing. Everyone's talking about, a soft or a no landing, or, the Fed's pivoted more dovish because now we're expecting 1 to 2 cuts this year. So sure. Can the Fed ruin it all and, put a big turd in the punch bowl? Yeah, maybe, but they probably won't. I mean, the Fed is not supposed to be political, right? But in an election year, if they continue to allow fiscal stimulus happen in the background and having a slightly dovish monetary policy, they're fueling it all, and they're certainly not innocent in the situation for like these all-time highs. And maybe it is good, but we could be sitting here at all-time highs and nobody's happy. We could be so disgusted with the whole system that it's like, everything's up, everyone's back to new highs, but more stuff is expensive and inflation still stings and gas prices are still high and people are still pissed about whatever. So as a consumer, maybe it feels worse than what it actually is. But, I know my 401k is up. I know my, managed accounts are up. I know for me, it's been easier to trade this year than it was in 2022, certainly less of a battle. So I don't mind it, so pick your battles, life's short. You only get one chance, right? Anyway, not a PSA. Let's see here. Asset correlation matrix, yes. Bullish trends target 2,500 on what? 2,500 on what? Looking at your, let's see, price waves more bullish wave 90. Well, I mean, but 92.25 on dollar Swiss is just going up to the highs. That's not anything great. I mean, if we get back to the highs here, 92.25 is right at these highs. You know, I'm not excited there. I'm excited here. You know, a little bit of a correction, slingshot me back to symmetry. Let's get to 96 or 9,700. You know, one of my favorite trades right now. I mean, yeah, they're all Swiss pairs are freaking awesome. I love these things. I'm long the Aussie CAD. This one's continuing to do very well for me. I built here at these equal lows at 86. I'm still building right now. New Zealand CAD. Okay, New Zealand CAD. If I build a little bit. Just give me a second here. My New Zealand CAD, I'm still building long. I did the same thing. Double bottoms here, 8,000. Pullbacks to 81. I'm still looking to see if this will get back up towards 87 or 88. CAD Swiss, probably one of my favorite trades right now as far as having some upside potential. To me, this could all be setting up for a big head and shoulders where we've had our dip and pullback. If this is a neckline break, we still have more upside potential. We saw a bit of a crown pattern down here, right? To start this thing off, I could see us forming a bigger break and a bigger move. Look, and this is all technical stuff here, but if we come back to this high around 68, I could see this setting up for a trade like so. We have a little pause. Let's say that this goes up to this high. Well, if we have a low, I could see us pulling back to the same level around 66 or 65. I would reestablish longs. I'd trade that to symmetry right in here. CAD Swiss, if I can, add now up to 68 and I can get pullbacks back to 66, I'll build at 68. I'll build at 66, trade this all the way up towards 71 or 72. One of my favorite trades in Forex is to be long, have positive swap, and have pips. If I can build this up for a 500 or 600 pip directional move and get paid to hold a position, delicious, right? It's great. So that's one of my favorite technical trades. And if it works out, I'll make a lot of money. If it doesn't work out, I'm still going to hold it for a while. Okay. So anyway, gold, silver, we beat those up quite a bit. We like both. I like both. I'm long on silver, long on gold. I do expect there to be some volatility and pullbacks, but I'm looking to buy dips and establish some positions. Core position, I'm long, right? I'm using some futures exposure. I'm using some options. I'm trading the ETFs, GLD and SLV. So a little bit of everything there. All right. So that could wrap it up for the session. I'm going to jump into my trading room here at 11 o'clock for equities on demand. We're going to talk some portfolio mixes today. Like I said earlier, I was in a conference this weekend with Tasty Trade, Tasty Live event in Seattle, which was a lot of fun. And they did a great job. Awesome panelists. The team was fantastic. So took away some great information and want to start incorporating that to the trading rooms. So good stuff. Yep, they're posting it in the chat. Thank you so much, guys. Chandler, Nick, and the team. Frank, if you're still out there and you're watching, enjoy the rest of your time in Europe. We'll chat again soon. But yeah, we'll be watching NVIDIA this week, the Fed minutes on Wednesday. And for the rest of this month, I mean, as they say, sell and may go away. But in this case, it's more buy and may and stay, because July and June, you look at the A1 Edge Finder, July and June are historically bullish months. June, July, and August. It might be a drift. It might be a melt up. But what better opportunity to have the market up, 15, 20% going into the election, that even if it tolerates some volatility, we could still finish the year positive, right? And maybe we finish at positive 25%. Maybe we finish at positive 10 to 12% after dips and pullbacks volatility. So do I have a crystal ball? No, I do not. But I'll figure out a way to make money. Okay. One last question. How do you find good pairs if they all seem to be correlated? Pure volume? No. What pairs are correlated? Pairs for what? Currency pairs? Pairs trades. You want to trade the S&P and the Qs. You can hedge, right? If I'm long the SPY short, or if I'm long the SPY short the Qs, I'm hedged. Right? That's a pairs trade because one's going to win out over the other. Currency pair wise, you're looking at baskets. Dollar basket, is the dollar strong, dollar weak? Is the yen basket strong or weak? But they're not all correlated. I mean, dig a little bit deeper, you'll see that there's ways to trade them. But there's ways to hedge, there's ways to pairs trade, there's all sorts of ways to do that. Okay. So you can bring that question up and we can dive in a little bit deeper if you want. Cool. All right, I'll let you go, everybody. Thanks for being with me. Nick, thanks for passing on the show as usual. Happy Monday, and happy trading, lots of profits. See you soon. Thanks, everybody. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.